in terms of market impact, didn't really see much as far as the Fed is concerned. Are there questions about how many rate hikes we get this year and into next?
There are some questions about it. Certainly, the no action today was no surprise. It was very well expected. And people are going to look through their statement very carefully. I think the biggest challenge that investors are going to have in August, and I think their conviction might be tested in August, is where they're going to find market leadership.
Is it going to be technology still?
Well, you know, certainly the FANG and FANG-related stocks showed some very clear signs of exhaustion last week. And the big question will be whether or not that comes around as another wave of selling sometimes this month. There's some pretty good selling in the retailers today. A lot of those stocks have had 40 to 50% gains after being nearly written off for debt at the end of last year. And people are not yet convinced that the financials can outperform. There's still that cloud of a flattening yield curve hanging over what might cap their performance.
Rick, we hit 3% on the 10-year today. The latest move higher that we've seen, has that been more down to domestic data or what's happening around the rest of the world in foreign bond markets?
I think a little bit of everything, but I would weight it most likely in the global lane with respect to where most of the activity that's resulting in slight rises in yields and drop in prices, whether it's Bank of Japan and how investors are trying to challenge the new boundaries the bank has drawn. Granted, the absolute level of rates in Japan is very low, but the real issue is how long they can keep rates contained, how long they can keep equity prices up and continue to see the economy. You look at China, their stock market isn't doing very well. They tried to take their pedal off the gas and hit the brake. That's all changed as they try to weaken their currency, and then they have to worry about capital leaving the country. I think all these global issues are much more predominant in influencing the firmness of long rates than much of the data. But now you have, a 5% handle by Atlanta GDP. Now, granted, that most likely will come down, but some of the data points today actually will for a little on the light side.
Yeah, I mean, Erik, in terms of this market leadership question, there's a debate. Technology is back on top of the S&P right now, but some are looking at healthcare, some are looking at financials finally to step in and lead. Do you see any kind of rotation underway?
Look, we think you should be looking principally outside the U.S. at other markets. We think the U.S. market is locked in this kind of death match between very good earnings and very high valuations. And the tariff talk seems to be the tiebreaker. And every time tariffs are mentioned, the market has weakness. So, we think the tariff issue is a real one, but we are not expecting it to escalate to the level that may have been already priced into non-U.S. stocks. And we think it's that conversation is also coming to a head. We saw kind of Europe and the U.S. achieve some agreement. We think this issue is coming to a head, and we think at that point, with the dollar behaving itself and maybe some uncertainty around trade removing, I think we have opportunity in the emerging markets and the rest of the non-U.S. developed world that's better than the U.S. because their valuations are better and their monetary policy is still very easy as opposed to tightening.
Timothy, are you looking overseas at the moment? Is there attractions in those equity markets relative to the U.S. valuations?
Certainly in some of the emerging markets, those ETFs have never really rebounded from the lows of the spring like the U.S. averages did. So if you're a little bit of a contrarian, and there will be issues there, I think that they're probably on a risk-reward trade. That's an interesting place to look.
What do you think, Rick? The whole global synchronized growth story kind of fell apart. As far as relative bet, U.S. bonds, U.S. dollar, that appears to be where the action is, right?
Well, the dollar, the foreign exchange market is holding up very nice. Both our guests are correct. And if you're a multinational business, what you hope for the most is just stability and low volatility in foreign exchange. Really, that's what we've had really since about the second week of May with the dollar index, the euro currency, which is a high percentage of that dollar index. But in terms of the fixed income markets, they've been super stable. We haven't seen any big drop in rates in any of the developed and big economies, and I think that will continue. I expect rates to keep moving higher, at least test that 311 high yield close for 10s, but I don't suspect, unless something exogenous occurs, that we're going to see it with any type of vinegar or aggressive tendency.